We're at the World Knowledge Forum in Seoul, and joining us on INSEAD Knowledge is Tom Albanese, CEO for Rio Tinto. Thank you for joining us on INSEAD Knowledge. Where and what is your long-term view of demand growth for your commodities, for iron ore, copper, aluminum, and so on?
As we look at our businesses, we see very strong long-term growth for iron ore, very strong long-term growth for aluminum, for copper, for all the energy products that we're in, and also the industrial businesses we're in. And even products like diamonds. All of a sudden now, diamonds are very popular in China. Chinese women are really desiring diamonds. So we're seeing the markets for those taking off. And this is just really one step along what we see as a longer term, very positive story for our business.
In terms of markets, will the growth in emerging markets likely compensate for growth elsewhere?
So far, we have been seeing the demand in Asia compensating as long as there is at least a slow level of growth in the OECD. I think we saw back in 2009, if the world gets into recession, it's a much different picture. But as long as there's slow growth, even off a low base like you see in the United States, the overall supply-demand picture for our business is pretty good. And so as a matter of fact, notwithstanding what you see in the financial markets, our businesses are all pretty robust.
Overall, the long-term outlook for the mining sector is looking pretty robust given the demands in Asia. But in the short term, you're facing supply constraints due to funding, due to labor market conditions, including worker strikes, labor shortages, and all the ongoing market uncertainty. What's your outlook for the rest of this year and next?
Our business is a paradox to that world economy. So, there are concerns about high unemployment in general in the world, and we're short of workers, short of trained workers in the places that we operate. There are concerns about the slowdown in the manufacturing sector, but we find extended supply chain delays because everyone wants the products we need for the mining sector. So again, there is a bit of a paradox between our business and the strength of our business and the broader economy. I do recognize over time they do have to come together, and we hope to see that we do have improvements in sort of the broader macro environment, and that will basically be strong for our particular business. But again, in this environment, we are still working hard to catch up with demand.
You were speaking earlier on a panel about business risk management, and you had described an evolution from 6-7 years ago from technical risk to something more complex, and in particular geopolitical risk. You actually mentioned that you spend a lot more time talking to heads of state today. What risk management strategies have worked for you in that regard?
As an organization, we're more comfortable addressing what I'd call technical risks, those risks associated with the ore body, associated with extraction, processing, below ground risk as you might call them. We have had less real focus and experience of what are above ground risks, risks to the markets, risks to, say, the interactions with communities, risks to the environment, and also risks with a variety of host governments. And we've been putting a lot of effort over the past several years in these particular areas, and certainly post the financial crisis, we've elevated the overall risk review process to something that is a very formalized process. It's something the board is very aware of and the board wants to stay right on top of. And we have a regularly scheduled risk review committee that I chair, and basically it encompasses all aspects of the operations and the functions of the business.
R&D has been an important part of your business, but how do you manage those budgets and priorities when global economic crises and catastrophic events like natural disasters, for instance, take center stage?
We have two different types of R&D. Effectively, we have to look at how to improve our processing and the means of extraction. And second, we have to look for the next generation of ore bodies through exploration. This type of R&D is critical for our supply 10 years, 20 years down the road. All too easy in times of budget tightness, these are cut. As a consequence, that makes it more difficult to grow. And that's to some extent the reason why copper price is so high now, is that R&D for copper exploration and copper development was cut during the 1990s and really until about 2005. We're still catching up with those cuts in R&D. I do believe R&D is important for our business. We have a leading position in terms of exploration, and over the past 3 years we've developed a leading position in terms of technologies, in terms of the next generation of technologies, robotics, operating centers, remote operating centers, and what we refer to as the mine of the future.
How are you changing priorities for Rio Tinto given everything that's happening right now?
We're staying focused on what we do, which is continuing to deliver low-cost operations, continue to run at full capacity, and continue to expand our business. And we have, again, the quality of the asset, we have a strong balance sheet, and we have a very capable organization. It takes all three, and we can make it work.
Mr. Albanese, thank you so much for joining us on INSEAD Knowledge today.
Thank you.